Good afternoon, everybody. Welcome to the Opportunistic Trader. This is a special afternoon edition of Ask the Opportunistic Trader, Larry Benedict Anything. We are on YouTube Live. We're also taking some questions from Twitter. And we're just going to talk to Larry. We have a lot of different questions. This is the sort of thing that we do regularly on our website, the Opportunistic Trader. Each day we have live webinars, information, education from really experienced traders. Larry's been trading for over 30 years. Was in the book Market Wizards, managed $1 billion fund. We have a lot of other traders on our site. We just had a options webinar from Tom McEntee and Vince Lancy. Both of those guys have over 30 years experience. They were giving information, education, a lot of great education on the options space, looking for risk reward opportunities, just really a 101. And so that's the sort of stuff we do on the website each day, along with live trades. So, a lot of great information. So we're opening this up. We already have a few questions that have been coming in via Twitter, Facebook, and YouTube. And so I'll start. First, Larry, you want to say a few words before we get going?
I'm happy and excited to be on YouTube Live. As my kids know, I have 3 boys. I don't really entertain the space all that much. So I'm glad everybody set this up for me to be able to answer questions and provide information to the trading community as well as people that have interest in the market. So it's great to be here with everybody today and willing to answer any questions and share any knowledge that I have with you.
Excellent. So while people are shy getting started, we'll start with some questions that people have already submitted from Twitter, YouTube, Facebook. The first one is, what is the first thing you do every trading day morning for your routine?
My trading routine sort of, unfortunately, doesn't really end. So I would say it ends with the day before at 4 o'clock. Markets reopen at 6. So always take a peek at Asia when it opens at 8 o'clock Eastern. Get a read, and fortunately or unfortunately, all of the global macro stuff that I trade trades all night. So S&Ps trade all night, and as well as other markets. And then depending on how busy we are, I would say 90% of the nights, sleep through the night, wake up in the morning, and the routine would be to gauge market activity and news from overnight, which we provide on our site early in the morning for everybody to see, our morning commentary. So we put that together. And what I like to do is gauge movement, look at volatility, and look at pricing of options as well as pre-market equities. And that gets me going for the day. And my day usually starts at about 7 a.m. in the office, and we'll trade outside the office because we could trade electronically from anywhere, but most of our trades take place in the office when we're in front of our screens at work. And we parse out the news, we wait for data, and I talk to the same people that I've spoken to for 20 plus years about the market. So I have 1 or 2 go-to friends that we talk market pre-open, get a game plan going, and try to implement the game plan. So that's sort of how my day goes. It's pretty much been the same every day since they've invented Globex in the late 80s, early 90s for access to 24-hour trading.
So what about on the weekend? As you look at the new week, like what sort of markets do you look at? What do you read? What do you think to focus on the coming week?
What I like to do on the weekends is review all the trades from the week, see what went wrong, what went right, how to make adjustments to stuff that I did. Then I like to look at some charts on individual equities as well as broad-based indices to see if I can pick some chart patterns that look bullish or bearish. And the bottom line is I like to prepare for the week ahead. But in what we do, since we're so short term in nature, really we want to be reactive. So I want to keep an open mind. I want to pick up some clues on different charts and different movements, but really look at the market movements for the week, broad-based, as well as my trades, and that prepares me for the week ahead. But always being flexible would be an important attribute to what we do here.
One question was, what programs do you use when you're trading? What software?
Right now, I'm using Interactive Brokers for my trading in my trading account, as well as we use a local FCM, and we do that as well. And we trading technologies, and I've used trading technologies for over 20 years, and I really enjoy that platform. The analytics on IB are good as well, so that's what I use. But there are many platforms out there that do the same thing. I was at Spear Leads and Kellogg for 11 years, and we had probably at the time the best system, the Ready system, to execute more on the equity front than doing futures and options. But obviously that system is really good as well. And I don't know I don't use it anymore, but I know we were bought by Goldman in 2000 and it was Ready. And I don't know if it's, a Goldman Sachs proprietary product because we were bought by Goldman Sachs, but that's a good system as well. And there's tons of systems out there that work well. There's it's just what you're used to, I think.
All right, now we're getting another question. What are your tips for beginner traders?
Go slow. Educate yourself. Become the real key, I think, and it took me a long time to really figure this out, and it's always hard to stay with, is be an expert in one thing. So when I had a lot of traders trading for me over the years, we would give traders, especially when I was at Spear Leads, we would give them, I ran the trading room, and we would give them, someone would be our financials trader. So they would know everything about the financials, key earnings, news, events, and it's easier to become an expert in one thing. So and especially on the global macro side, like when you're looking at S&Ps and bonds and oil, it's very difficult to become an expert in all of those things. So my suggestion to people out there would be pick a spot, pick a stock. I say this to people: watch three stocks, and basically be an expert. So I love to trade Apple. That's my favorite stock to trade. It's the largest cap stock, and it has great movement. It moves between 1% and 3% a day. So be an expert in Apple, and you don't have to conquer the universe. Just trade Apple. Know its every move. Know it made a low early in the week at 163. It's trading at 170. This is probably the top end of this range for now. You might want to sell against 171, 172 using a stop, knowing that maybe we go back down at some point and test the low. So all of these things are important to know, but it's too hard to know Apple, Facebook, Google. That becomes much more difficult. So my advice to somebody that's starting is get knowledge. Try to get a mentor, try to get somebody that's done it before, try to be in a position where you could become an expert, or not an expert, but work with an expert and learn one or two things so that you can become an expert. So that would be my ultimate advice. And then as well, start very, very small and be patient. So this game, people out there are telling you they turned 20,000 into 2 million, and all of that. That may happen, 1 in a million, but you can make a living doing this. But it takes time. And when I started, I was 21 years old, and I didn't make money for 3 to 4 years. Obviously, people that are doing this most of them don't have time to wait 3 or 4 years, but it really took 3 to 4 years for it to click in. And then I felt like I had confidence and I had capital behind me and I was able to do well. But, start small, use discipline rather than try to conquer everything. Stay to one or two things or stay to your knitting and try to find somebody that has done it before that could sort of walk you through the process, and hopefully you become successful.
Good answer there. And just giving a market update like we do on the site, it looks like S&P was trading up at 26.86 is the high. Right now trading 26.67. So we've dropped about 20 points from the high. And I'm also looking at crude oil. You guys can see these charts here. Crude's coming in as we approach the 2:30 close here. But some great questions. And we're getting a question from Lawrence Jackson asking about any trading courses you recommend or coaches you recommend who are taking new students. The one thing I'd point out to that one is, just recently, just before we got on at 1 o'clock on our own website, we had a great trading course from Vince Lancy and Tom McEntee on options. Larry's on doing webinars each day. We actually spoke with Mark Yusko earlier today. We always have a lot of great speakers on talking about the markets. Specifically now, we do have options education. We call it Options School each day at about 1 o'clock. Going over those sort of things. So
and I'm willing to talk to people anytime they want. They could contact us and we set up a private call, talk markets. I always love to talk markets. Obviously, I'm only going to give the best advice or thoughts that I have, but I'm always open to chatting with anyone. So to answer that question, I'm a little bit biased. So I would say, being on the Opportunistic Trader would give you the opportunity to speak with myself, Mark Fisher, along with other experts that are providing information and knowledge in the marketplace for you guys to utilize and make a lot of money from.
We have another good question coming in. At what point did you gain confidence in your trading abilities?
Well, right now, today, I'm lacking full confidence. I'm not having a great month. Since we've opened up the site to the public, our trades have been really, really good. This month, we're basically 1 in 5, and I can't see the ball straight. So I'm trying to make less trades and sit it out. So my confidence is not high now. So confidence that I could do it, I think came in the 90s, late 80s, early 90s when I joined the big company and they provided me resources to become very, very successful. It's harder on your own to have that confidence, but one thing that you have to have is discipline and the ability to battle back. So confidence is all a mental mindset, and no matter how good you are, you could be the best trader in the world, you're going to suffer from a loss of confidence when your trading goes bad. So it's a matter of discipline, really. Discipline leads to confidence, and knowing that you could make back whatever you lost. So if you lost 8% of your capital, you can make that back. That is confidence. So I think, keeping P&L in line develops confidence. And for me, that happened in the late 1980s, early 1990s, where I felt confident and felt like I could do this on a consistent basis.
We are getting a question. How long did it take for you to get your trading down, would you say?
I think that happened, like I said, in 1989. I mean, I made money a little bit before that, but inconsistent. But in 1989, I joined a company that gave me capital, and for 11 years at that company, we made money every single year. So I would say 1989, before I joined Spear, it was inconsistent, and then it became very, very consistent, and literally didn't have a losing year from 1989 to 2012. So it was a pretty good streak. at that point.
Somebody's asking, do you recommend a minimum account to start your trading?
I don't recommend, but I would say you wouldn't want to put more than half your money into a trading account at any point in time. And then on that, I don't think you would want to draw down half of that. So I would say half of your potential assets to trade, and if you happen to draw down half of that or a little bit less, I would either take a complete timeout and reassess, or significantly look at trying to do something else. So the dollar amount is all relative to how much money you have.
Question coming in, as a retail investor, what strategies do you recommend as a hedge for possible upcoming bear market? ETFs, any specific securities?
Well, I think you'd have to look at your portfolio, look at the time frame. If your time frame is 5 to 10 to 15 years, if we go into a bear market, there's no reason to really hedge that, because you're not going to sell as long as you're comfortable if your time horizon is 15 years. If you're trading and using leverage and all of that, then I would look at ETFs potentially on the broad-based index, as long as your stocks are market-based stocks. And then, if you want to get more granular and you have more experience, you can hedge each individual stock by utilizing options. But if you're in a retail account and you're, and also it's age dependent. If you're between 20 and 35 and you have income coming in, that's a different person than someone that's 70 that isn't making income and is living on the market. So it would really be on the retail side. It would depend on who the investor is, what the time horizon is, and but if you wanted to generically hedge a position and you had $1 million worth of equity longs and you wanted to not have that and you wanted to hedge $500,000, you could buy, vanilla ETF puts on the SPY, or you could sell SPY against your position. So there's a lot you can do, but it would depend. I would talk to your financial advisor on that, and especially if you're not trading, I would let them. You can express your view to them, and they should have a very good answer on how to hedge that position. Although in the marketplace now, there are many people holding themselves as financial professionals that don't have the experience. And if you haven't been in the market for over 10 years, you haven't even seen a down year. So I think that becomes a problem. But overall, it's pretty easy to hedge. If you're trading your own account, you can hedge it yourself by using ETF or puts. And you can use calls to enhance the return, but that's a whole nother thing. But if you're having a financial manager manage your money, they should have a very good answer when you say to them, hey, how do I hedge my risk? So that's how I would answer that.
How do you deal with all of the emotions that come with being a trader? Anger, frustration, etc.
I've matured in my old age, so I'm a little different now than I was 10, 15, 20 years ago. My personality is will to win at any cost. So I, was very, or am very good at beating myself up. And, a lot of people don't do that, but I would, be very, very hard on myself. And, it would get me motivated. I'm highly competitive. I think that that's a feature that you have to be in the market, because you're not competing against another individual guy, but you're competing against the market on a daily basis. So, it's, for me, it was being aggressive, being on top of myself, and having the ability to, bounce back.
How do you go about sizing your positions on your day trades?
That's a good question. What I like to do is I like to look at the P&L for the month. So if I'm trading a unit size of, let's just use a smaller unit size, or my smaller unit size, let's go with 100 contracts. So if I'm trading 100 contracts and I'm making money, and we're up a couple of percent for the month, I would size bigger because I'm playing with what I call house money. So once we're in house money, we're trading bigger. So depending on the P&L would depend on how we would size, but it's important to, when you're doing better, size up. Look at your P&L on a month-to-month basis rather than a day-to-day basis, to try to, what I like to do, and my old COO used to come to me, and he would tell me what I had to make on the month, every single month. And the way to get to that was not by starting with the larger lot size. We were grinding it out, adding P&L, and we were able to size. And once we were up good money, we could take really big shots, and we would do that, and it worked out well. But in sizing your positions, I would look at it a month-over-month basis, and as you're doing better, take your lot size up to the volatility. So we look at the volatility, and today was an interesting day. Just looking at today, market was up 400 points, and the volatility, it's very strange. So it's only down 3% on the day at 21. So for me, I look to size my position off of volatility. So if I see a 20 volatility, and I'm just talking S&P, I would think that a 20 volatility is a 1.25% to 1.5% move in the S&P every day. Right now we're up 1%, but we probably were up 1.5%. So we're saying top to bottom, this market will move anywhere from 30 to 50 points. So you got a size equivalent to the volatility. That being said, we we look at that on a daily basis, and size versus your P&L. I think that's important. So that's what I look at to size.
What are your current market thoughts?
My current market thoughts right now is, I think the market is in the midst of a correction. We're in seasonality here, and when I say market, I'm talking S&P. I mean, I could talk pretty much every market globally with you. I could have a view on the bond market, and I could quickly go through my views. So on the S&P and the NASDAQ, I think the market is trying to hold up for the year. I don't think we're going to be able to. I think there's a Fed meeting middle of next week that is going to put a crimp in the market. Maybe first reaction will be bullish, that they're not as tight, but overall it's another hike into a declining GDP and growth market. I think on the equities, I'm negative. I think we're going to have a bear market here. Again, we have seasonality working, so they may buy it into the end of the year, but the beginning of next year, with this high volatility, it'll continue. So equities, not that bullish. I'm more bearish. Global equities, I'm a little bit more bullish on China. My trade for next year that I like is being long China, Shanghai, and Nikkei, and being short US. That trade was probably, if you did that trade this year, it's the worst trade on the board. But I think that will mean revert. So we look at that. As far as oil, the market, I don't really have a feel here. It's $51. It probably trades lower into year end, and then we might have a rally. That market this year amazed me the most, because at $77 or whatever the high was, we were trying to short it, and you couldn't stay shorted. So now you can't buy it. It goes down every day. Bond market looks overvalued in general. Don't see a big trade there. Dollar probably remains strong next year. Think Apple trades heavy into next year. But, for what I do, it's really, to have a year opinion is not anything that is beneficial. We're looking at everything every day, trying to add alpha or P&L and help people have the ability to get information and learn and make money.
Somebody writes a good question here. Some people try to make it seem like trading is easy and you can be a millionaire in 3 days. Is that fake news?
I mean, a lot of the reason why I decided to start the site was I looked at it about 10 years ago, and I really should have done it 10 years ago because the space needed it. And what's happened in the space is people are putting out fake returns and saying things that aren't true and looking, around and saying, you can buy a Ferrari in 3 days and, putting cash on the table and doing that. So the answer is that is fake news. This is an extremely mentally, physically, and emotionally difficult business. And it's not for the faint of heart. And the success rate is very, very low. Very low. I would say it's one in many thousand. Someone gets on dancing around in their underwear saying, they made $1 gazillion. That is not true. And my thought is, if it is, why are they dancing around like that? Why do they have to show you a private jet or a Ferrari or whatever? That's fake news. So it is very difficult to make money. It takes a lot of hard work. It is attainable for sure, but it's hard. I mean, and there are people on our site now that have worked for me that sat in a room with me for 10 years and watched it, so they know the pain physically and mentally that has been endured to make the money. So it is not easy. The markets now, though, I will say, for active day trading, the market's phenomenal. Like right now, I'm watching crude oil just crash off the board.
Exactly.
S&Ps are crashing. The market is very unstable. I don't know if there's news coming out somewhere. I'm sure there is. That's the one difference as well. The algos just push the market in illiquidity so much, and it makes it very, very tough. But the market doesn't feel well. I said that before, and I'll say it again. I don't think we get out of the woods so easily here. Financials are wounded. The Russell is wounded. But overall, getting back to what we talked about, it's a very difficult business, but it can be done. We're here to try to help, and you should check us out.
Once again, so this is Larry Benedict, and we have a site called the Opportunistictrader.com where we provide information, education, and live trades throughout the day on our site. You can check us out, www.opportunistictrader.com. We have live webinars each day, information, education, option courses, futures, and like we said, some live trades. So a few other questions here. Nathaniel says, greatest moment in your career as a trader?
That's a good one. You know what? I said it in Market Wizards, and I'll say it again. The greatest moment in my career was when I first made money and I made $1,000. In reality, there have been many, many good days, but the one thing that I'll say that's important, that makes you a trading professional, is I never celebrated any up day, and there was no great days. There were amazing days. Like an amazing day to me was standing on the floor in 1987 for the stock market crash. That was amazing. That's something that I could literally say I'll never see again. A, because there is no floor like that, and B, because the way that day took place will never happen that way again. So that was an amazing day. An amazing day, or an outside day, which was unbelievable, was it was a sad day, but the day that the space shuttle flew up, and I was trading in a stock Lockheed Martin, and they made the rocket booster, and that was probably one of the craziest trading days that I ever experienced in my life. The stock was just going crazy. Obviously, '08 was pretty unbelievable. Different than the crash of '87. Definitely different than 2000, 2001, the internet bubble. Because '08 literally took a long time to take place, and really '09 was worse. And I won't bring up my friend's name, but it's very, very funny. He called me, and we were so busy every single day. And he called me and he said, we just need a day to relax. And it was so busy. And then literally I got a call from him in 2013, and he literally said to me the opposite. He's like, we don't trade anymore. So, the ever-changing environment has been interesting to watch, but there have been a lot of events. But as far as P&L or money, you have to become sort of immune to what it is. You have to look at it as a business, and when you first start, making $1,000 is a lot, and depending on how high or how much you do, X hundreds of thousands might not be a lot. So we're hoping that everyone can get to that plateau. But as far as looking at an individual day, like I don't have a day where I can say, hey, this happened and I made so much money. I mean, I probably had that, but I've never looked at it that way. But really looking at it, it would be looking more at events. Like that to me was amazing. Like seeing different types of events, and seeing I don't know, how many people remember the phone, the Palm Pilot, and it was owned by 3Com, and this was in 2000, and they spun off Palm Pilot, and 3Com went down. I never saw anything on a screen look like that. There was so much stock for sale that there were, I don't even know if they do that anymore on the equities. It was like 6 nines going across. It was like 10 million all the way down. And, just seeing events like that, I think that's the more interesting part of, looking at, the business, not really the P&L for me.
All right, a few more questions. How have you adjusted your trading given high?
That's a really good question. You have to really know that your orders are being traded in front of, and basically use more bids and offers, whereas I used to be what I call a creator of liquidity, meaning I would be able to reach up and, if I wanted to sell the market right now, I have to go down through liquidity to get filled. So knowing that, it's changed a lot of what I've done. I can't be as fast as what I once was, but I could still be effective. And you got to learn in a way to utilize the high frequency or algorithmic trading to take advantage of when they're moving the market outside the box. So that being said, just adapting to that style and knowing that you're not the fastest guy in the room anymore. So that's really the adjustment that I've made.
What skills would you say are necessary to become successful in trading?
I've tried to figure that out. I've hired Harvard MBAs. I've hired professional athletes. I think you need to. I think you need to be able to handle risk, take risk, and assess risk, but also not be opinionated and arrogant. And maybe one day I'll be able to use artificial intelligence to build my trader. I probably should, but I've managed hundreds of traders through my career, and it's very difficult to find the full package. And I'm not exactly sure, but I think someone that's aggressive with discipline, that's smart, that is not arrogant about how smart they are, because the market's smarter than everybody, would be, someone that would be successful in.
All right, we'll go last question here. Do you have any thoughts on if a website that provides breaking news provides a benefit to traders? I've heard the machines are much faster, so it's not much of a benefit.
I would say that, and we've dealt, with people that are parsing out or giving out the news, and they think they're fast. And my opinion is that you can't beat the algo. The algo, it would take me a bit of time to explain exactly how that works with timing to the exchange and where their servers are. And it's, if I'm in Florida, my order goes to Hoboken, New Jersey, and then the exchange. They have somebody sitting in the exchange. So any news that you're receiving, you can't touch an algo, and you have to understand that you're reacting to the news. So almost you could work as a reverse to that. So maybe you could take advantage of buying or selling, counter that move after all the people that read the news that think they're fast got in. So I don't think a news site could help you. I mean, they're claiming, like, some of these sites are claiming they're faster than the algo, but I don't. Even if they are faster than the algo, which I don't see, you can't be faster than the algo. So I don't see a benefit.
All right. Well, I think that's enough for right now. We went over our 30 minutes that we said we were going to go. We had a lot of great questions. So once again, this is the sort of stuff that we talk about all the time on the Opportunistic Trader with Larry and then a team of others as well. We have about 3 to 5 webinars each day. We have a lot of different original blogs. We have breaking news, information, education, all throughout the day. Just like I said before, at 1 o'clock, we had an educational webinar on options from Tom McEntee and Vince Lancy, who both have over 30 years experience. We have all sorts of other information on the site as well. Check us out, opportunistictrader.com, and you'll hear from Larry every morning and throughout the day.
And I'm willing, to go out on the limb and help anybody and answer any questions that people have to try to help them become better at it. So I look forward to seeing everybody on the Opportunistic Trader, and good luck.